GM, everyone, it's Blake here. Want to say thanks for everybody for all the well wishes over the past 2 weeks to me and my new wife. And also, thanks for your patience with our trading service. So, these past 2 weeks, you guys know I was taking some time for myself, which was much needed and a lot of fun. But unfortunately, the market decided to go in a really strong uptrend. So, I missed the majority of this move, and I've been able to catch a few 5 minute day trades long. But yeah, let's get into it. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading and also give you some insights into how I'm looking at this market. So, you guys know, prior to me leaving and taking some time away, I talked about this 395 area on SPY, saying, hey, above this is price strength confirmation. And if price can close above that, it's a very high odds trade that we're going to get some sort of an uptrend that would pay. And that's exactly what we got. So we talked about having a bull flag above the cloud. We got that, and then finally a breakout, and then a really nice uptrend that if you were able to capitalize on, took zero heat on. So very nice, easy uptrend, but we're still in a bear market. So this uptrend, really started back here on the 19th. That's how I would classify it. And we've been in a 14-day uptrend. So 14 trading days, roughly 3 weeks of uptrend trading, which is how we like to trade. And it's been very, very fruitful if you've been able to take advantage of it. But where do we stand today, right? Well, we're pretty far deviated from the top of that cloud. That's that 10-day moving average. And we're encroaching on some serious resistance, right? So this is a previous, level of interest that we weren't able to break above. And I think, if we can't get above this candle's high, the June 2nd high, which was 417.44, it's pretty likely that this, 2001 pattern that we've talked about before, potentially we could be close to a pivot point before starting a new downtrend. Now, I can't get bearish yet because we're still in an uptrend. And if we get back above this area, and you can also see I have this level highlighted here, 421, which is roughly the 50% fib retracement from the all-time highs to the recent lows. If we can get above the 50% fib along with this price level here, that would pretty much change my thesis on the market and would make me believe that maybe the bottom is in. Okay, so you guys haven't heard me say that for quite some time. So positive news, right? If we can get it above this area, potentially the bottom could be in and we could be heading back to at least the 460 area on SPY. So it's important to keep an open mind. But as you guys know, psychology and humans repeat. So if we look at a 2001 historical chart pattern comparison, and we won't pull it up today, but we're at a very key inflection point for SPY. And one of the things that scares me is, everybody's looking at that 2001 pattern comparison. And typically when everybody's looking at the same chart, that pattern diverges. So it'd be good for the markets because that pattern suggests that we fail here and we roll over, we break trend, and it's much, much worse sledding moving forward. And maybe these are some local tops. But that being said, if we do break through, this 417 area and get back above this 50% fib, yeah, I think our investment portfolio will be 100% equities and probably some sort of small leverage in that account as well. Because this is, you have to stay open-minded. But the reality of it is we're still in a bear market. And you can see the 200-day moving average is still way up here at around 433. So until we can get back above that 200-day, I'm not too confident. But getting in early, maybe calling a bottom early, like I said, first we need to clear this previous level of resistance. You can see we're bumping up against it, a 14-day uptrend. We're losing momentum. Has a decent probability to break trend here, and maybe get sloppy or roll over. So you have to respect resistance. And if you look at some of the charts like Tesla, it's hitting its 200-day moving average. Some of the other leaders, they're encroaching on resistance. So we have to respect that resistance. Now, do we get short there? Absolutely not. You guys know we like to get long in uptrends, and that's typically where we like to make our money. This was the fourth uptrend this year. So yeah, we had one here, two, 3, and this is the fourth uptrend. So, yeah, fourth uptrend this year. This one actually paid pretty nicely if you were able to catch it. And yeah, moving forward, we're going to have to keep a close eye on what this week holds. I think this week will be very important. If we break that 10-day moving average, obviously that would cause us to enter no trend, and we'd obviously be lightening up. But until we break trend, we're going to stay long with stops. So whether you got in, up here, you probably could use your stop as the August 2nd low. Whether you got up anywhere in this uptrend, you could probably use this pivotal low here on the July 26th low. So 2 levels that you can use as stops. Obviously, this stop is still above that 10-period moving average, so a little bit of a tight stop could get whipped around. If you've been long anywhere in this uptrend, I think a solid stop to trade against would be the July 26th low, which nicely coincides with where we bounced off that 50-day moving average. So, yeah, stay long with stops. If we can get back above some key levels, I think the bottom could be in. So we'll just have to wait and see what the market throws at us. Be nimble, stay open-minded, and yeah, be ready for whatever comes next, because it's going to be volatile. We're in a bear market. We've had 14 days of uptrend to get paid, and we're encroaching on some serious resistance. So it's important to respect that and understand where we are in trend. And yeah, now is not the time to be, pressing the gas pedal and getting leverage long. Now is definitely the time to be peeling off some of your runners, some of your longs, and potentially holding some of those runners versus your stop. So that's how I'm playing this week. And we'll have the playbook that goes out shortly. So I'll see you guys on the open. Take care.